Hey everybody, this is Scott Yance with Greater Texas Mortgage, and today we are talking insurance. And I have with me Mary Randal, who I do a lot of business with Goosehead Insurance. Welcome, Mary.
Thank you.
So today we're going to talk about all things homeowners insurance.
We're going to
So,
talk about the one thing that nobody likes to talk about, right?
oh yeah,
Every-
everybody loves talking about homeowners insurance, right?
Nobody likes talking about homeowners insurance.
Well, you don't go to parties and people want to pull you over to the side and ask for all your advice or anything like that.
Yeah, no, I think that homeowners insurance, especially in Texas, is probably most people's least favorite thing.
Yeah, I agree with that. So, big picture, what is going on with the industry right now? We hear all kinds of stuff, the rumors, the facts. Different agents talk about different things. What's going on out there right now?
So, first of all, I think I wanted to just talk about insurance itself in the beginning and just kind of explain that, we just mentioned, right? Nobody likes homeowners insurance. Nobody likes having to pay for something that they hope in the end they'll never have to use, right? And I think with, these companies that spend billions of dollars on their marketing, right? You have the little Geico, you have the Emu, you have the Chaos guy, right? So these big companies spend all this money on advertising, and what do they all tell you? They all tell you, I can save you hundreds of dollars in 5 minutes or less. And so I think, the marketing of the insurance industry has kind of forced people to think, oh, insurance is just this commodity that, I want to pay the least amount of possible for and then hope I never have to use it. Right. But for most people, their houses are their largest asset. Right. You help people secure mortgages for their homes. Right. That's for most people their largest asset. So insurance is really designed to protect that asset. If any kind of catastrophic loss happens to the house, you want to make sure that that person is covered. So it's more of a really complex financial services product as opposed to just a commodity like, oh, I have a mortgage, so I'm required to have insurance. And so I'm just going to get the cheapest possible. And so I think if people can just start to think a little bit different about insurance and say, hey, this is a complex financial services product. It's really important that I understand, what my policy is, what type of coverage that I have. And I know you and I will probably get into that later, what type of policy this is. And then also, how much am I paying for it, right? Because that premium is important. But like all things, you really do get what you pay for. So you want to make sure that you have right coverage at the right price. And then I think that's how people should be thinking about insurance. But going back to your question about the current state of the market, if I have to kind of, like in the simplest terms, I describe it as we are finally seeing the light at the end of the tunnel. So I'm sure a lot of people, and I know you have as well, seen these insurance policies come across your desk, or people have been getting their renewal notices in the mail and they've seen their premiums skyrocket. So over the last, I'd say at least 6-ish months, maybe 6 to 9 months, we've definitely seen a softening of the market. So with the insurance market, you'll have a soft market, and that means you have a lot of carriers that are open in certain areas. There's a lot of competition. The insurance companies have strong balance sheets. Their insurance companies, so the reinsurance for the insurance companies, they have funds that are readily available. And so life's great for everyone. Like it's great for me, the insurance agent, it's great for you, the lender, because you're able to qualify people on their loans. It's great for the homeowner because they're seeing like, hey, I've got a really good policy at a really good price. So that's the soft market. What we've had over the last, I'd say 5-6 years has been a really hard market. And so hard markets is when we see carriers that completely pull out of a state. Texas was a big one where we lost a lot of carriers, where carriers will just start non-renewing homeowners. So they basically say, hey, we don't want any of these homes on our books. I know California and Florida are big on that as well. And there's just not a whole lot of competition, and there's big rate increases. So that's been the last 5 to 6 years. And then over the last several months, we've definitely seen a softening. So carriers are coming back, rate increases are back in the single digits. You'll see a 5-6% rate increase. On the auto insurance, there's even decreases sometimes, which has been wonderful. And then just more competition.
So what's driving that market? I mean, we know hell's a big deal, right? In Texas, correct? We don't have mudslides like they do in California. We don't have all the big forest fires. What are the things that are just the big driving factors that are causing those changes in Texas? Because they are a lot higher than what they used to be.
So much higher. And then I've been with Goosehead. This will be 19 years for me. So over the last 19 years, you've seen the industry change a lot. And when I first started, we would have, $1,000 deductibles for wind and hail. And now, 19 years later, that's completely unheard of. And so when I kind of look back and think, like what changed, it all goes back to COVID. And so, you had pre-COVID, you had during COVID, and now we have post-COVID. And so back in, March or the spring of 2020 was, COVID, and we saw inflation just skyrocket. So we have, cost of labor and cost of materials completely skyrocketed. So that, in my opinion, that's what kick-started the hard market, was that inflation.
So it's not just the wind and the hail. It's the overall cost of rebuilding that house that might have been worth $30,000, or excuse me, $300,000 a few years ago, and now it's worth $500,000. Right?
Yeah, exactly. And then you fast forward a year later, and then we had that huge freeze. It was February of 2021, and it wasn't necessarily the freeze that did that much damage, but if you remember, a lot of homeowners in Texas lost power. And so the power was out for days. And what that did was cause, pipes to freeze. And it's not the actual freezing that does the damage, right? It's when they thaw out. And
Right.
so that for Texas, that claim, so just that winter storm of February of 21, cost over $10 billion. So that cost insurers over $10 billion. There was over 500,000 claims on homes in Texas. And so that, in my opinion, had a far greater kind of impact on Texas premiums than even the inflation from COVID itself.
Okay. So I know that they probably take into account obviously the size of the home, the age of the home, that type of stuff. But is there certain tracks, like certain weather patterns, that affect how much the insurance cost is going to be? Like whether you're in Tornado Alley, or whether or not you're where you get more traditional hail during the spring or fall, and as opposed to one part of the state or the other. Does that have an impact on it?
100%. So insurance companies, it's a pretty archaic industry, right? I think we can all agree.
Right.
But even the insurance carriers are getting pretty tech savvy, and they're using, technology, they're using AI, and they're really drilling down on certain areas, because it used to be kind of county based, and then it was city based, and then now it's very much zip code based. And so insurance companies will know, which areas are more prone to storms, right? Whether it's wind, whether it's hail, whether it's tornado. And then they base their premiums on those zip codes. And then not only premium, but they'll also base eligibility. And so, certain companies will say, we're not taking homes if they're in kind of this catastrophic weather prone area. So Texas is unique, right? Because you have the coast, right? And so then there's a lot of carriers that won't take homes, on the coastal region, because it's too much of an exposure for them. And so they don't want to risk, any kind of hurricane loss. So it's a lot harder for people along the coast to get insurance because, of that catastrophic weather exposure. And so, those zip codes will be closed for a lot of carriers. But then even up north, and this is what we've seen over the last couple of years, is it's getting a lot harder to get insurance up in the north, in those kind of high risk areas. And another thing that I think it's newer that I haven't seen except over the last year or two. So, I mean, Texas always has a bunch of people moving in, right? Texas is a rapidly growing state, especially the Dallas-Fort Worth area. And, what's new is we have these new kind of areas being developed, and a lot of insurance companies won't take them because they say that their wildfire score is too high. So now, not only do we have to worry about hurricanes, tornadoes, wind, hail, there are certain areas now that insurance companies say, hey, you're too close to, this kind of forest. And so we don't want to insure you, or you don't have a fire station close enough to your house. So we don't want to insure you.
So what does somebody do when they can't get coverage? I mean, let's just say, for example, their policy comes up and says we're either not going to cover you anymore, or they have a claim or something like that, and they're with a mortgage company and they need coverage. What does somebody do when they can't get coverage?
So I think that there's always options for people, right? Right now, we've seen kind of a move from the admitted market. So the admitted market is the companies that they're kind of governed by the Texas Department of Insurance, right?
Right.
And so anything that they do, it has to be filed with the Texas Department of Insurance. If anything were to happen, if that company were to become insolvent, then those homeowners would be also backed by the Texas Department of Insurance. We've seen a big push to the excess and surplus market now. And so the only difference between the E&S and the admitted is the E&S carriers, they're not governed by the Texas Department of Insurance. And that's not to say that, they go rogue and kind of write terrible policies and don't pay out claims. It just means that they're able to respond a little bit quicker to market demands. And so then they're able to change their pricing a lot faster, which makes them more competitive. And they're also available, like you mentioned, to those people where it's a lot harder for them, or if they are just unable to get insurance from the admitted market. So now we have all these new carriers in the E&S market that are available. And then worst case scenario, somebody has a house, that's on stilts, that's, in the water in Galveston, right? So if they have, everyone says, absolutely not, we are not insuring this home, then the Texas state has their own carriers. So there's Texas Fair Plan insurance that they can get an insurance policy through that. And then there's also Texas Windstorm. So there's always insurance available. So our state will take care of us. But yeah, you kind of have to go through the different channels.
Okay, so what about credit? I know I've heard that credit has an issue when people are applying for insurance.
Credit is a huge one. And so insurance premiums are based on a million different factors, right? And so you have the house and all the characteristics of the house, what's the age of the house? What's the age of the roof? What type of plumbing does it have? Does it have a circuit breaker? How many stories is it? What's the construction type? What's the roof type? Does it have a swimming pool? There's a million different rating factors that go into the home. So then the home is what we call the risk itself. And then you have the subject. So the subject is the person buying the house. It's the person taking out the loan. It's the person that's the named insured on the insurance policy. And even with them, there are many factors that go into, does the insurance company want to insure this person? And if they do want to insure this person, how will they rate them? And so credit is a big factor in that. And like all things, the better your credit, then the better your insurance premium is going to be. Because the way the insurance companies look at it is, this person's responsible, they're going to take care of the house, they are less likely to file a claim. So we will give them a better rating or, a lower premium. But I think one important thing, I think people get a little bit nervous, especially when they're buying a new house and they say, oh, like I can't have anything hit my credit. And so when insurance looks at credit, it's part of the whole insurance score. And so what they look at is, how long have you had continuous insurance coverage? How many claims have you had? Have you been on time making your payments? Have you ever had cancellations? So all that goes into that actual insurance score. So the credit score that they look at, it's a soft hit. So it's not a hard hit. It will never show up on your credit report, and it won't impact your credit score, but it is a part of that insurance score that affects your premium.
So I know it's a hypothetical, but it's kind of the question came up by what you said. So I run across clients a lot of times who do the whole Dave Ramsey thing. They have a lot of assets. They make a very good living, but they don't have any credit because they pay for everything in cash. And my thing is, you need to at least put a utility bill or something on a credit card and pay it off every single month so that you have credit revolving. So let's just say, for example, you have a client that has a nice home that they're buying. There's no issues with it. They're putting good money down on it. They don't have anything negative against their credit, but because they don't have really any credit usage, does that have an impact on what their rates are going to be?
Yeah, it would.
It would. Yeah, and that's one of the things that I'm always preaching with people is this isn't 1980 anymore. You've got to have good credit, and you have to be conscious about it. You don't have to have debt, but you have to have credit. It's two different things,
Yeah.
So let's talk about roofs. Okay. Actual replacement cost and actual cost value of that roof. How does that factor in a policy?
Yeah, it's huge. And that's been one of the biggest differences that I've seen over the last few years is how insurance companies will handle replacement cost. And, because going back just a few years, there was companies like State Farm who would insure the roof at replacement cost regardless of age. So it didn't matter. You could have a 30-year-old roof and then had a hail claim, they would come out and they would pay replacement cost coverage. What insurance companies have found, because over the last several years, is not only has the frequency of kind of our catastrophic weather increased, but the severity of that catastrophic weather has increased as well. So we're seeing more storms happen more often, and they're a lot more severe. And so insurance carriers have had to kind of respond to that. And there's been a couple of different ways that they've responded to that. And that's why it's really important that people understand their insurance policy, what it covers. And what I always try to tell people is there's no right or wrong when it comes to insurance, right? It's just whatever you're most comfortable with. Because when you think about insurance is just a transfer of risk. So either I take on the risk if something happens to my house, I'm going to pay for it out of pocket. So I pay less to the insurance company, or I'm more risk adverse and I say, you know what? I don't want to take care of things that happen to my house. I want my insurance company to kind of take care of more. So I'm comfortable paying more premium to the insurance company so they have more risk. So it all just depends on whatever kind of that comfort level of each individual. But a couple of things going back to the roof is replacement costs now is generally 10 years. So if you have a roof that's 10 years or newer, the insurance companies will pay the replacement cost coverage minus your deductible. So you have a $20,000 roof, you have a $4,000 deductible, you pay the $4,000, the insurance company will send you a check for $16,000, right? That's kind of the simplest. What we've seen now is insurance companies won't do replacement cost, even, if it's a newer roof, or they give the client the option of, hey, we'll give you a lower premium if you insure more of your roof. So we're either going to do an actual cash value roof, or we're going to do a roof payment schedule. And they're a little bit confusing because they kind of feel like they're the same thing, but they are different. So actual cash value means that it's subject to the adjuster, right? So that same $20,000 roof with a $4,000 deductible, instead of getting a check for $16,000, that claims adjuster can say, well, I think that this roof is, it's a 30-year-old shingle, it's 15 years old, it's a 15-year-old roof. So I'm going to depreciate at 50%. So now I'm going to take out $10,000 from this claim. So then instead of getting that $16,000 check, now they're getting a $6,000 check.
Okay.
So then
So,
they're having homeowner is having to pay more for their roof. Then you have the third one, which is the roof payment schedule. And this has kind of, I think, become more common over the last, several months as well, just to kind of help lower those premiums, is the insurance company will say, if this roof is 0 years old, right? We put it on last week. We're going to cover it at 100%. If it's 1 year old, we're going to cover it at 97%. 3 years, 94%. 4 years, 91%. So it's a schedule, all the way down, to however, long they'll cover that roof. And so those are just ways that insurance companies are, I guess, trying to, pay out less in claims in these kind of big catastrophic these catastrophic weather situations where they can just maintain profitability. Because if the insurance companies maintain profitability, they're going to continue to want to do business in your state.
right.
And then deductibles. I think that's another huge thing. We used to have 1% wind and hail deductibles here in Texas. So that's 1% of what the house is insured for. So your $300,000 house example, 1% would be $3,000. So that's the out of pocket for the homeowner. Now the new standard across kind of most of Texas is 2%. So then their out of pocket would now be $6,000.
So, all right. So let's take a couple examples here, because this is obviously something that home buyers need to look at. So if you're buying a home that say is brand new, it's a builder built home, that roof is starting at day 0, correct? If there's an insurance claim prior to you buying a previously owned home, and they have to put a new roof on, we're starting out at 0. Okay. But let's just say somebody's going to buy a house that the roof's in good condition. There's no issues with it on the inspection like that, but it may have been put in 8 years ago. Okay. What kind of things does a potential buyer need to take in consideration when they're looking at that insurance policy?
So the age of the roof is a huge rating factor. So the newer the roof, the lower premium you'd have. And then 8 years is still within that 10-year kind of replacement cost window. So then they should be okay knowing like, okay, I can still get replacement cost on this. And most companies won't grandfather you in. So then they would have replacement costs for 2 years and then have to understand after that, they are going to have to go to an actual cash value or a roof payment schedule policy. So I think it's just understanding, with that age roof, it will impact my premium, right? Newer the better, but then also it will change the coverage that I have.
That's one of the things when I'm talking to my clients, right? Especially new home buyers that may not necessarily understand the taxes and the insurance up front, right? And I'm going over that. And one of the things that I'm talking about, especially when they're looking for either a new home or they're looking for existing homes, is location, age. All these things have an impact on it. For example, whether you have a PID, a property improvement development type tax stuck on there, there's places where you could literally go across the street to a different neighborhood and be taxed at a different interest rate. And the same thing when they're looking at homes, whether you're buying out in a rural area, whether you're buying close in town, whether it's a particular type of makeup of the roof, these things they need to take in consideration, because I don't think people understand how big of an impact the insurance and the taxes have on their debt to income ratio as opposed to an interest rate. An interest rate amortized over 30 years, even if your interest rate goes up 0.5% from what you were hoping for, it's not that big of an impact on your debt to income ratio. But I've seen homeowners insurance and taxes completely kick a homeowner out of being able to buy a house because of that.
Right. Yeah. And unfortunately, I've seen that as well, where the combined taxes and insurance makes that, that particular house unaffordable for that person.
Yeah, I mean,
So,
you and I've had this conversation, right? When I send people over, I'm like, hey, they can't afford more $2,500 a month. So let's just say, for example, $2,500 a year. If you've got a person who the maximum we know can have a policy that's $2,500 a year. Okay. What are the adjustments that you can make to a policy? But what's the impact that it's going to have?
Yeah. Yeah. So the nice thing about being an independent agent is we broker insurance. And so we have multiple carriers that we can quote with and then see who's going to be the most competitive. And then, you always want to make sure that you're insuring the house at 100% replacement cost. That way, the homeowner is protected in the event of a catastrophe, right? And so they have, okay, we're going to rebuild this home to the way or the quality grade that it was prior to the loss. But deductibles are one big thing that will have an impact on the premium. And then there's always additional coverages. We call them endorsements. I know some people will refer to them as riders on an insurance policy. So, there's certain things that we can add on to have additional coverage, but those things are all optional. And so you can kind of look at, either adding them or taking them off.
Right. So, I think one of the examples that we've run across before is, you went out, you shopped all the different insurance policies out there, right? And just for this particular house, let's just say the cheapest was coming in at $3,000 a year. They had to be at $2,500 a year just to make it work, correct? So we ended up going with a higher deductible, correct? We did say 3% deductible as opposed to a 2% deductible, okay? What are the risks to the home buyer when something like that happens?
Well, they just have to understand that they're taking on more risk, right? So that in the event of a claim, they will just have to come out of pocket, that additional 1%, which, like I said before, there's no right or wrong. It's just about comfortability. What are you comfortable with? And some people, say, hey, I'd rather kind of take on more risk than pay the insurance premium. But I just had a client last week who came to me and she had a 5% deductible on wind and hail on an $800,000 home, and so now you're talking about a really high deductible. And she just said, I'm not comfortable with this. And so we were able to fortunately save her, quite a bit on her home premium and get her back down to the 2%.
Right. And I noticed that we also have a lot of people just want the cheapest coverage, right? They haven't.
Everyone does, Scott.
Everybody wants the cheapest coverage until they have to file a claim, right?
Yep.
So, I mean, if you've ever been in a situation where, I didn't realize I didn't have this coverage. I didn't have this coverage, or they didn't do this. Well, you had the cheapest coverage out there, right? It's like with anything else. You're like you said in the beginning, you're going to pay up front or you're going to pay later, right?
Yeah, that's exactly how it is.
So what are some of the things that people overlook when, they know they have to have wind and hail, right? That's required by the mortgage companies. Okay. But what are the other little coverages, the endorsements that they really should be adding on to their policy to protect them just in case something happens?
I love this question. So we know, in Texas, primarily, like you said, it's roofs, right? We want to insure our roof. We want to make sure that we're covered for wind and hail. Outside of wind and hail, in my opinion, it's water protection. And the thing with water is a little bit of water can do so much damage. And so you want to make sure that you have sudden and accidental water coverage. That's the one where a pipe burst, appliance leaks, there's water everywhere. So that's a big one. So you want to make sure your policy includes that. Then there's additional water coverages. So if you flush your toilet and the water comes up instead of going away from the house, or if you have like the water in your shower drain starts to bubble up, that's water backup. So that's another additional endorsement that I always recommend. And then you have water foundation. So, here in Texas, they'll kind of dig out the trenches, lay the pipes, and then pour the foundation, right, the concrete on top of it. Sometimes we'll get, problems with those pipes. They'll crack, they'll bulge, and then you now have kind of water damage. So they've got to get to that pipe to fix it. That's another one. And then slow leak coverage. So this one is if you have a leak that goes on for more than 14 days. And so generally it's something kind of innocuous, like behind the dishwasher, a washer comes loose, washing machine. And so it's just a slow leak over time. And then one day you notice like, oh, why do my cabinets look wet? Why does this floor look like it's warping? And so that's another one that can be pretty costly to repair, right? Once you have that water damage. So in my opinion, I'd say water.
Water. I have a couple of friends who've done this in the past, and they're so off the wall. I have one friend. She lives in Louisville, and she's pretty close to the dam. So even though she's not in a flood zone, she has flood insurance in case the dam ever breaks. Um, I think it's pretty cheap to do it, but she was just paranoid about, okay, if the dam ever breaks and I get flooded, my insurance is not going to cover me for flood
Right.
insurance. Okay.
Yeah.
And then I think when they were having all the earthquakes in Oklahoma, people down here started getting earthquake insurance. So it's always things you don't think about, right? And that's where, don't you think it's important for people to at least make a regular phone call to their insurance agent and talk about the new things? They may have been with you or State Farm or anybody for the last 10 years and they just been paying their renewal, but things change, right? Environments change.
Yeah, things change, right? The risk changes. I will tell you another endorsement, and this one's relatively new. It came out a couple of years ago. It's service line coverage, and it will provide coverage if there's an issue with one of the service lines that goes from the city to your home. So historically, insurance would only cover the house itself, right? It doesn't cover land. It covers the foundation, the walls, the roof, everything in it. And so now they've extended that coverage. So from the foundation to the street. So any service line, so whether it's a water pipe, gas line, anything that kind of goes from that line, if there's a problem with that and it needs to be excavated, you can add that service line coverage. And I will tell you, I've had several of those claims just over the last few years. And so this is my one hot tip. So if you are a new home buyer, so whether it's first time home buyer or you're just looking at buying another house and you're purchasing a home, especially an older home, don't just do the new kind of home inspection. They're great, but they're not looking at your plumbing. So pay the extra, however, a couple $100, get a licensed plumber out there, do a plumbing inspection. So the last two large claims that I had were on clients who had purchased older homes. And then soon after, like I'm talking within the first few months of owning the home, huge plumbing issues, had to dig everything up, and that can get super expensive.
Oh, wow. Okay. So when a client, let's say they're getting ready to go get a policy with you, okay? I know a lot of times we'll send it over, we'll get a quote, you'll call and you'll go over the policy with the client, okay? What can new home buyers and even old time home buyers, what can they do to be proactive on a regular basis?
Yeah, have all the information available, like know your house, like know how old the roof is, know what the construction type is, know, if you have an impact resistant shingle roof, have the certificate readily available. And then just kind of keep note of the updates. Like, when did you last replace your HVAC unit and your furnace? When was your water heater last replaced? Just kind of knowing those things, I think are really important and really help kind of the customer and the agent getting the right policy for them.
Yeah, I see a lot of people that are not, I think they take insurance for granted, right? Are you
Oh,
back?
wait, did I lose you for a second?
Yeah, I think I lost you there for a second. I can edit that out. Don't worry about it. Okay.
Okay.
So, so from your perspective, okay, I'll call you up. I'll refer clients over to you. You have realtors that refer clients over to you, right? What conversations do we need to be having with people when they get ready to get insurance?
So like I mentioned, just make sure that they know the house, right? They have the information about the house. And I think that's it. I think maybe prepare them, especially if they're coming from out of state, for the insurance sticker shock, because people that come from other states, especially if they're in, the kind of Northeast area, they're used to paying very low premiums and having very low deductibles. And so maybe just a heads up, welcome to Texas. You're going to love it here. It's great, but our insurance in Texas is the most expensive in the country. And, it's like we talked about earlier, inflation, yes, is having an impact, but inflation is having an impact across the US. For us in Texas, it's mostly just exposure to that catastrophic weather.
You're back.
Yeah.
All right. Not sure what's going on there. So,
yeah.
Okay. So, where were we?
So we were talking about how, if a new client's calling in to get a quote, kind of how can they prepare? When they're looking for a house, it's important for them to understand, real estate, they'll always tell you location, 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 right?
Right.
And so insurance is the same. So your location, right, that zip code is going to have a big impact on your insurance, but also so is the age of the home, huge rating factor, age of the roof.
Yeah, I think somebody does not want you to tell this side of the story. So, all right, welcome back. We've got you back again. Let's try this one more time, okay? You were talking about what clients should look for when they're looking to buy a home.
Yeah, just location's huge, age of home, age of roof, and what updates have been done to the house. Plumbing, electrical, does it have a swimming pool? Is there a slide, diving board? All those sorts of things that they should be kind of paying attention.
So they should definitely get an insurance quote, which I have every one of my clients do that, that. But the minute they make an offer on a home, I'm like, we're getting an insurance quote right now so that we know exactly what we're talking about, not at the last minute, correct? So that's a big deal right there.
And I love that you do that. And that's always what we recommend our clients. As soon as you put an offer in on the home, call, get an insurance quote.
Yeah, but at least you can kind of know in the ballpark. You can always shop it, but at least you know where you're at and a good starting point. So we'll continue to treat clients like that, get the information out there, what we need to do to better the situation, right? Is the market starting to soften a little bit where the rates are coming down? Are you seeing any of that?
We are, yeah. So definitely rates are coming down. A lot more carriers are coming back into the market. So companies like Nationwide that were closed for a few years are slowly starting to open up in certain zip codes. So yeah, like I said, we're not out of the woods just yet, but you can definitely see the light at the end of the tunnel.
Okay. So let me ask a couple more questions and we'll finish it up here. Do you have a checklist maybe that say I wanted to send to a client for things to them to think about when they're talking to you about insurance coverage, like those endorsements? Do you want these endorsements? Are you in a potential flood area, but not really a flood area kind of thing?
We look at all of those things. So we look at, the homeowners insurance, right? Do they want to add flood insurance? Because like you were mentioning about your friend, even if they're not in a high risk flood zone, there still could be a concern about flooding because there's quite a number of flood losses that happen in those low risk areas. And then if you're not in a high risk flood area, then the flood insurance is relatively inexpensive. So for some people, it's nice just to have that for that additional peace of mind. And then we always look at adding, additional liability protection if that, homeowner is interested in that, especially if they have a swimming pool. Mm-hmm. And then also, do they have kind of personal articles that we would have to have a floater for them too. So kind of look at all of that.
Okay, well, cool. So anybody wants to get in touch with you, how do they do it?
Call me.
Okay. What's your number?
817-345-6366 or Mary.Randal at Goosehead.com.
Mary Randal at Goosehead.com?
Mary.Randal.
Mary.Randal. Okay, great. Well, I will be in touch with you, and I really appreciate you coming on here today.
Yeah, thank you. It was fun.